Hey Samfam, this is Shriya from Samaya, and today we are going to discuss about SA 299, this joint audit of financial statements. First of all, usually we'll go to the objective session where we could get a brief overview or outline of the standard, what it is talking about. The objectives of this standard are to lay down broad principles for the joint auditors conducting the joint audit. Who are joint auditors? When two or more audit firms are working for a single entity or a single set of financial statements, those were joint auditors. And in such an engagement, it is known as a joint audit. What is the standard? The standards tells about some few principles how the auditors have to conduct the joint audit and to provide a uniform approach to the process of joint audit for various engagements. A uniform approach has been designed by the standard to identify the distinct areas of work and coverage thereof by each joint audit. It is distinct is something but separation of work, individual work, allotting the work to each joint auditor. That is, we have to identify that distinct areas of work. To identify individual responsibility, as we have segregated work here, for that segregated work, each joint auditor has individual responsibility, and for the unsegregated or common work, undivided work, the joint responsibility shall be also put in place. We have to identify that responsibilities also. And that joint responsibility is joint and several. And we'll move on to the next call out here. The joint auditor are required to issue common audit report. Why auditors? Why we went to entity? We went to entity to form an opinion on the financial statements and give a audit report. So how that audit report should be? That audit report should be common. One financial statement, one audit report. Even though how many auditors does the work, so they should give a common audit report. However, if they have any disagreement in the opinion, they could issue a separate audit report. But while issuing separate audit report, what they have to do? They have to make a reference to other audit reports. That is, audit reports that were given by other joint auditors we have to make a reference of it. And the joint auditor is not bound by the views of the majority of the joint auditor regarding the opinion or matters to be covered in the audit report, and shall express opinion formed by said joint auditor. Here, you see, we are not a bunch of judges to follow the views of the majority. Each auditor has his opinion. If he wanted to give separate audit report, he could give that. And each joint auditor is responsible for reviewing the audit reports or returns of divisions or branches allocated to them and ensuring that they are properly incorporated into entities accounts. That is, we have discussed here, right? They have distinct areas of work. They have separately given the divisions or branches for each joint auditor or joint auditor. What do they have to do? They are responsible for such divisions or branches that were allocated to them. But if they were not allocated, if any kind of branches or divisions that were not assigned to any joint auditor, what do they have to do? They have to agree among themselves on that such division for reviewing those branch audit reports or returns. And with that as foundation, we'll move on to the say 299 standard. The joint auditor shall jointly establish. What do they have to jointly establish? First thing, as with our foundation, what we have learned? We have learned they have to issue a joint audit report. And for that, they have to have overall audit strategy. They have to jointly establish overall audit strategy. One financial statement, one audit report, one audit strategy. Discuss on develop a joint audit plan. One audit strategy, one audit plan. Identify division of audit areas and common audit areas. This was the objective of the standard. Ascertain the reporting objectives. You have to ascertain the reporting objectives, how the report has to be given. The factors that significant in directing the engagement team efforts, why all the preliminary activities or assessment of risk of any kind of material misstatement that was done before the conducting of an audit, understanding the business environment and all. Why do we do that? The benefits of audit plan is to direct the engagement team efforts and to uh, give more attention to the significant matters. This is something that you could easily write whenever you find an audit plan here. Consider the results of preliminary engagement, nature, timing, and extent of resources. Obtain common engagement letter and common management representation letter. You see, how could we remember all this? First thing, by the auditor had got, you have to jointly establish what? Audit strategy, audit plan. And then with that audit plan, what you have to do? You have to What's the benefit of an audit plan? The factors that are significant to direct the engagement team's effort, and that's it with regards to that. And identifying and dividing the common audit areas and separate audit area division, that was in the standard 4 points over there. And the fifth one is why the auditor had went to give an audit report. For that, you have to ascertain the reporting objectives, and you have to do some preliminary engagement activities prior start of audit. And common engagement letter, that was on common management representation letters. This was during the course of the audit that we take management representation letter or written representations from management. And this engagement letter is something, an agreement to do the audit. This is what shall be established jointly by the joint auditors, and joint auditors shall be jointly and severally responsible for. Here what they said, they have to identify individual responsibility and joint responsibility. What are those joint responsibility? What are situations or what are the circumstances that joint auditors are jointly and severally responsible for the work that was undivided? Is auditor audit work, if the work is divided, they have individual responsibility. If the work is undivided, they have jointly and severally responsible. And decisions that taken by all joint auditors, and matters which are brought to notice by the joint auditors by any one of them. Like, as the audit or work has been divided, if they found any significant matter or a fraud or a deviation, that has to be communicated to the other joint auditors as well. All those matters that were communicated. Here, when the work was undivided and when decisions were taken by all, and when the work was divided, but the matters were discussed to the other joint auditors. All the three scenarios, jointly and severally responsible. And examining that financial statements of entity comply with requirements of relevant statute. As we said, one financial statements, they were jointly and severally responsible, because financial statements only one, audit strategy one, audit plan one. For all the one things, they are jointly and severally responsible. About regarding financial statements, requirements with relevant laws or rules and regulation or statutes, and presentation of those financial statements, and the audit reports. Even audit report is one, so they are jointly and severally responsible. And these three, when audit work is not divided, decisions taken by all. But when audit work is divided here, but the matters were discussed with other joint auditors, jointly and severally responsible. Here, financial statements, requirements with relevant statutes, presentation and disclosure of financial statements, and audit report, compliance with relevant statutes, jointly and severally responsible. And joint auditor is entitled to assume that what are the presumptions of joint auditor. Other joint auditors have carried out their part of audit work, and the work has been actually performed as per standards on auditing. What's the responsibility of the auditor? The responsibility of the auditor is to do the audit as per standards on auditing. You see, a joint auditor has gone to audit the financial statements of the entity, but not to review the work of other joint auditors. For that, peer review is there. So we have to assume that the other auditor is doing his audit as per standards on account auditing, and the financial statement of a division, branch are audited by one joint auditor. That's what we have discussed here, right? When they were divided the branch or allocated to them, they have to they are individual responsibility for review that. So whenever there's individual responsibility with regards to division or branch, what you have to think that all the financial statements that they have audited for that division or branch allocated to other auditors comply with legal and regulatory requirements and present a true and fair view. We have to think that is, we are not assuming that some error had happened in the financial statements of the other auditors audit, other auditors in what they have audited, and the other auditors have brought to said joint auditors notice any departure from applicable financial reporting framework. You see, here we have discussed that the matters which were brought to the notice of joint auditors by one of them shall be jointly and severally liable. That is, whenever an auditor find any kind of deviation, they will communicate with the other joint auditors. He have to presume that all the deviations, all the significant matters were discussed, and no matter that was left behind. So this is what they're talking about. The other joint auditors have brought to said joint auditors notice all the departures from the applicable financial reporting framework. And with that said, what are the presumptions? That the other had done the work as per standards on accounting, and all the financial statements that were auditor allocated by other joint auditors were true and fair, and all the joint auditors had brought to said joint auditors notice any departure from AFRF. And that's it. Happy learning. And please do subscribe, share it with your friends, and please leave a like.